Well, the feds raised the rate for the fourth time this year. It's the cold bath they hope will cool off record inflation. But how will we know if it's actually working? Well, Fox 5 ITV's Dana Fowle spoke with an expert about what we should be looking for. Dana?
Yeah, and that was the question I had is, okay, we're doing this, but how do I know
when do we know?
Yeah, when do we know? Well, here's a quick primer on what's going on with inflation. It's the highest we've seen it in 40 years. It means your dollar doesn't go as far as it did 2 or 3 years ago. The reason the Federal Reserve raises the rate is to lower consumer demand so that costs will come down. You want it to even out so that everyday things like groceries are more affordable. This is absolutely a balancing act. And I talked with Bo Henderson, the CEO of RichLife Advisors.
You're hearing the things, the inflation's going up, the rates are going up. Sounds really scary, but this is just the other side of what we've experienced the last decade or so of almost zero interest rates, right? And very low inflation. At some point, these things have to cycle and come to a mean to set the stage for long-term prosperity and growth over time.
So this was coming. They'd hoped it would come slower, this sort of rejiggering of it all, but you know, the pandemic gave it the boot. So let's go back to what this means for your wallet. How will we know if increased interest rates are working to cool off inflation? Automobile prices, they're starting to come down. That's great news, and maybe you can get that new or used vehicle if you need it. If you can see everyday goods and services in your reach again, that is a good sign.
It's things that we use like grocery bills. When we're checking out, are we getting half as much groceries for the same amount? Or are we starting to see it a little bit better? And there's already talk that we're kind of hitting a peak on inflation, and I hope that's the case, and that we start to see it ease from this point moving forward.
But when rates go up, it also can mean a few good things. Higher interest rates mean savings vehicles like CDs, money market accounts, annuities, and savings accounts become more attractive. Lastly, interest rates, though, for your car and home loans will go up. Your credit card will charge you more, too, if you carry over a balance. But if you have great credit, you are still going to get great offers. And with prices going down, say you need a new car and you've got great credit, you may still get a really good offer. So this would be good for you.
So we're also seeing gas prices go down too.
Yes, and that's good.
Yeah, it is good.
But this only marginally affects those prices. Gas prices are made up of a whole lot of other moving parts. It's kind of a different animal, but yes, that's getting better for the budget too. So hopefully as we get into fall, things will cool down a bit, and then, you know, it's time to Christmas shop.
Yep. Oh gosh, did you have to throw that in there?
It's time.
Oh my gosh, you're right.
It is.
A lot to think about.
Yeah.
All right, Dana, thanks as always. Happy Friday.